Welcome to the deep dive. Today we're going behind the scenes
Ooh.
of one of India's oldest
Okay.
and most intriguing conglomerates,
Right.
the Murugappa Group.
I'm ready.
Imagine a company
Yeah.
that's been around for over a century.
Wow.
Fingers in practically every pie,
Interesting.
from farming to factories to finance.
Yeah.
That's Murugappa Group in a nutshell.
Got it.
We've got a mountain of information about them,
Okay.
including insights from their latest board meeting
Uh-huh.
and financial reports.
Yeah.
But for this deep dive, we're focusing on a real hidden gem.
Okay.
Cholamandalam Investment and Finance Company Limited,
All right.
or CIFCL.
CIFCL. Got it.
Yeah, CIFCL.
It's fascinating how CIFCL has quietly become this powerhouse
Right.
in financial services.
Yeah.
In just 15 years, they've gone from having a little under 1,000 employees to over 64,000.
I know, it's unbelievable.
That kind of growth is phenomenal.
It's like they went from a local bakery to a global food empire.
Right.
Practically overnight. But it's not just about the sheer number of employees, is it?
No, not at all.
Their financial performance has been on a rocket ship trajectory, too.
Absolutely.
Give us the details.
They've achieved a 48% compound annual growth rate in profit after tax from 2010 to 2024.
Whoa.
To put that in perspective, imagine investing in CIFCL back in 2010.
Yeah.
Your investment would have multiplied many times over by now.
Wow. So,
And their market capitalization, basically the total value of the company,
right.
has skyrocketed from a modest 623 crore rupees
Mm-hmm.
to over 99,000 crore
Goodness.
in the same time frame.
So how did they pull off this incredible transformation?
Well-
They didn't start out as a financial services giant,
Not at all.
did they?
They began with a focus on equipment financing,
Okay.
but they didn't stay in one lane for long.
So they
Saw the potential in other areas
smart.
and strategically expanded to vehicle finance,
Mm-hmm.
consumer loans,
Okay.
and even loans against property.
So they were smart about it. They didn't just jump into everything.
Right.
They really thought it through.
They forged strategic partnerships
Okay.
and grew organically,
Which means?
which means they expanded their existing business lines
Right.
without relying heavily on acquisitions.
So they basically built their own financial services ecosystem
Yeah.
from the ground up.
Yeah.
And it seems like they weren't afraid to embrace technology along the way.
Absolutely not.
So give me some details there.
Well, they launched Chola Securities,
Uh-huh.
developed a user-friendly mobile app,
Okay.
and even built a digital platform for loan origination,
Wow.
making it easier for people to access financial services.
So they were really ahead of the curve
They were.
with that whole digital transformation thing.
Yeah, they were.
What's remarkable is even when the world was reeling
Yeah.
from the COVID-19 pandemic,
Yeah.
CIFCL managed not just to survive, but to thrive.
That's right.
In FY21,
Mm-hmm.
they achieved a 16% growth in assets and a whopping 44% increase in profit after tax.
Impressive.
That's a testament to their resilience and their ability to adapt to unexpected challenges.
There really is.
Okay, that's their impressive backstory.
Yeah.
But let's fast forward to today.
Yeah.
What does their latest performance tell us?
Well, their recent financial reports reveal some eye-popping numbers.
Okay.
Their total assets under management, or AUM,
Hmm.
think of it as all the money they're managing,
Got it.
has crossed a massive 1.89 lakh crore rupees.
Whoa.
That's a 34% increase year on year.
Huge.
And their disbursements,
Okay.
the loans they've given out,
Yeah.
have reached over 25,806 crore rupees
Wow.
for the last quarter,
Okay.
up 15%
Uh-huh.
compared to the same period last year.
So they're lending more money
Yes,
and managing even more assets.
that's right.
But are they making money?
Absolutely.
Okay.
Their profit before tax has grown by a healthy 27%,
Uh-huh.
reaching 1,464 crore rupees. Even more impressive is their net income for the quarter,
Okay.
the actual profit they take home,
Right.
which saw a phenomenal 37% jump
Okay.
to 3,541 crore rupees.
Those are some seriously impressive numbers.
They are.
But it sounds like they're playing in a lot of different sandboxes.
Yeah.
Are all of their business segments performing equally well?
Well, some areas are definitely hotter than others.
Okay, like,
Vehicle finance, which was one of their early expansion areas,
right?
continues to be a star performer.
So they're still doing well with that.
They are.
What kind of numbers are we seeing there?
They've seen a 16% growth in disbursements
Wow.
in the last quarter alone.
Okay.
And their AUM in this segment has increased by 21% year on year.
So they're still riding the wave in vehicle
Yeah.
financing.
Yeah.
What about some of their other ventures?
Well, loans against property are also showing strong momentum.
Okay.
This segment has seen a 23% growth in disbursements in the last quarter,
Uh-huh.
and their AUM has jumped by an incredible 40% year on year.
Whoa, that's a big jump.
Even their home loan business, which is traditionally considered a slower, steadier market,
Right.
is experiencing impressive growth
Really?
with a 15% increase in disbursements
Okay.
and a 42% jump in AUM.
So it seems like they've found a winning formula across the board.
It does seem that way.
They're growing rapidly and expanding into new areas,
Mm,
but such aggressive growth can come with risks.
of course.
How is CIFCL managing this potential downside?
That's a great question because sustainable growth requires careful risk management.
Absolutely.
And from what we've seen, CIFCL seems to have a robust risk management framework in place.
Okay, that's good to hear.
They're not just thinking about credit risk,
Right.
which is obviously crucial in financial services,
Yeah.
but also fraud, cyber threats,
So they're really thinking about all the angles.
regulatory compliance, and even those emerging risks that are harder to predict.
So they're not just wearing one safety hat. They've got a whole arsenal of protective gear.
Exactly.
But let's break this down a bit.
Sure.
How are they actually tackling each of these risk areas?
Okay, on the credit risk front,
Mm-hmm.
they're heavily reliant on data analytics.
Okay, so they're using data to drive decision-making
Yes,
throughout their credit and collection processes,
that's right.
which helps them assess borrowers more accurately and manage potential defaults.
And they're constantly refining their policies to adapt to the ever-changing financial landscape.
So it's not a static system.
No.
They're constantly learning and adapting.
Exactly.
They've also got robust governance structures in place
That's right.
to make sure their underwriting and collection models are regularly reviewed and updated.
Yes, it's like having a team of expert mechanics constantly fine-tuning their lending engine
Okay.
to ensure it's running smoothly and efficiently.
That's a great analogy.
Thanks.
And it sounds like they're not taking any chances with fraud either.
Absolutely not. They've implemented best-in-class preventative controls and are actively sharing best practices within the organization and across the industry.
That's great.
But perhaps most importantly, they're investing heavily in employee training programs
Right.
to raise awareness about fraud and how to prevent it.
So it's like they're building a human firewall against fraud.
Exactly.
And what about the increasingly important area of cyber risk?
They're definitely not ignoring that
Yeah.
CIFCL is investing in robust cybersecurity capabilities,
Uh-huh.
conducting regular security assessments,
Okay.
and constantly strengthening their protocols.
So they understand that in today's digital world,
Yeah.
protecting their systems and their customers' data
Yeah,
is absolutely paramount.
absolutely.
So they're building a digital fortress to keep those cyber threats at bay.
That's right.
And of course, there's the whole jungle of regulatory compliance to navigate.
Yeah, that's a big one.
So how are they handling that?
They've got a dedicated team of compliance experts with extensive experience in this area.
Okay, good.
They've fostered a compliance-first culture,
Uh-huh.
which means that everyone in the organization, from the top executives to the frontline staff,
Right.
understands the importance of following the rules.
That's good.
They even have a stringent code of conduct that applies to all levels of the organization.
So they're not cutting corners when it comes to compliance.
Nope.
They're playing by the rules
That's right.
and making sure everyone on their team is doing the same.
Absolutely.
But all this risk management wouldn't mean much
Right.
if they didn't have a solid financial foundation to build upon.
Exactly.
So tell me about that.
Well, CIFCL boasts a healthy capital adequacy ratio, or RR, of 19.76%.
Okay.
Now, for those who aren't fluent finance speak,
Yeah.
CIR is basically a measure of a financial institution's ability to absorb potential losses.
Got it.
The higher the CIR,
Mm-hmm.
the better equipped they are to handle unexpected shocks.
Okay.
And CIFCL's CIR is well above the 15% requirement
Uh-huh.
set by the Reserve Bank of India.
So they've got a nice cushion to fall back on if things get bumpy.
We do.
What about their borrowing profile?
I've got a very diversified borrowing profile,
Okay.
which means they're not relying on any single source of funding.
Smart.
They're using a mix of instruments like bank loans, bonds, and commercial papers,
Uh-huh.
and they're borrowing from a variety of investors, both domestic and international.
So they're not putting all their eggs in one basket.
Right.
That's a smart move, especially in today's volatile financial markets.
Absolutely.
But there's more to a company than just numbers and risk management.
Of course.
What about CIFCL's commitment to doing good while doing well.
Yeah.
Let's talk about their ESG, environmental, social, and governance performance.
Okay.
They've been recognized in the FTSE4Good Index series for the last 5 years,
That's right.
which tells us they're taking this seriously.
They are. That recognition is a big deal. It means CIFCL is meeting global standards for responsible business practices.
Okay.
They're focusing on sustainability, reducing their environmental impact, promoting financial inclusion, ensuring employee well-being,
Okay.
contributing to community development,
Yeah.
and upholding high standards of transparency and regulatory compliance.
So they're proving that it's possible to be profitable and ethical at the same time.
They are.
Okay, so they've got this fancy ESG policy, but how are they actually putting these principles into action?
Well, they've established a dedicated ESG governance structure,
Okay.
which includes board-level committees and internal working groups.
Uh-huh.
These groups are driving the implementation and monitoring of ESG initiatives throughout the company. It's a systematic approach that ensures they're not just talking the talk,
Right.
but walking the walk.
So it's not just window dressing.
Yep.
They're actually making an effort to be a force for good.
They are.
And their presence in the FTSE4Good Index series is a testament to that. It's third-party validation that they're living up to their commitments.
Absolutely.
They're tackling multiple fronts, minimizing their environmental footprint, promoting social equity and inclusivity, and upholding ethical governance practices.
It's a holistic approach.
It is. It sounds like they're covering all the bases.
They seem to be.
But I'm curious about one specific aspect.
Okay.
We talk about their impressive financial performance.
Yeah.
But are there any areas where their growth seems almost counterintuitive?
That's an interesting question.
Yeah.
Well, their success in the SME loan space is a great example.
Okay, why is that counterintuitive?
This market has been tough for many financial institutions to crack. But CIFCL is thriving there. And I think it comes down to their ecosystem play.
Okay, what do you mean by that?
They're not just providing loans.
Okay.
They're building a comprehensive support system for these businesses.
That's smart.
They're offering resources, mentorship,
Okay.
and even access to markets,
Interesting.
which can be game changers for small businesses.
So they're not just a lender, they're a partner.
Right.
That's a pretty savvy strategy.
It's-
And it seems like their overall diversification strategy is paying off.
Yeah.
They're not putting all their eggs in one basket,
It's a good approach.
which is always a good thing.
Absolutely. By spreading their risk across different products and market segments. CIFCL is creating a more resilient business model that can weather economic fluctuations and sector-specific challenges.
It's about building a company that's built to last.
Exactly.
Speaking of things that are built to last,
Yeah.
let's talk about CIFCL's most valuable asset.
Okay.
Their people.
Right.
They've grown from a few hundred employees to over 64,000 in a relatively short period.
That's a lot of growth.
That kind of rapid expansion can put a strain on any company's culture and talent management.
It can.
It's like going from a small family gathering to hosting a massive music festival.
Right.
You need a lot more infrastructure
Yes.
and a different kind of energy to keep things running smoothly.
Absolutely.
So how are they handling that?
Well, it seems like CIFCL understands that challenge. They've invested heavily in creating a structured career progression framework.
Okay.
It's not just about hiring people. It's about providing clear paths for growth and development within the company.
So it's like they're building a career ladder, not just a career jungle gym.
Yeah, that's a great way to put it.
They want their employees to see a future for themselves at CIFCL.
Right.
And that means providing opportunities for advancement, skill development,
Yeah.
and leadership training.
That's right.
And are they doing anything specific to foster a sense of community and belonging,
Yeah.
especially given their rapid growth?
It seems like they're focusing on creating a culture of learning and collaboration.
Okay.
They've got mentorship programs, knowledge-sharing platforms,
Okay.
and even internal social networks that help employees connect with each other and learn from one another's experiences.
So they're creating a virtual water cooler where employees can connect,
Yeah.
share ideas, and build relationships, even if they're not physically in the same location.
Right. Exactly.
And that's particularly important in a company with such a geographically dispersed workforce.
It is.
Speaking of geographical reach,
Yeah.
we touched on CIFCL's extensive network of branches across India earlier. How is that network contributing to their growth and their talent pool?
Well, their presence in both urban and rural areas gives them access to a wider talent pool,
Okay.
which is a huge advantage in a competitive market.
Yeah.
They're not just recruiting from the major cities,
Right.
they're tapping into the talent in smaller towns and villages.
So they're casting a wider net and
Yes,
bringing in fresh perspectives and experiences.
absolutely.
And they're also providing opportunities for employees to experience different parts of the country and
Wow.
gain a broader understanding of the Indian market.
It's like a built-in cultural exchange program.
That's a great way to put it.
And that's a valuable experience for any employee,
Yeah.
especially those early in their careers.
Okay.
So we've talked about their growth,
Yeah.
their impressive financial performance,
Mhm.
their commitment to ESG,
Mhm.
and their people-centric approach to talent management.
It's a pretty impressive story so far,
It is.
but we've only just begun to scratch the surface.
That's right. There's so much more to explore,
So stay tuned for part 2 of our deep dive into CIFCL
where we'll delve even deeper into their journey.
and uncover even more insights into this fascinating company.
Absolutely. It's going to be a fascinating ride.
Welcome back to the deep dive. We're continuing our exploration of CIFCL, the financial services powerhouse that's part of the Murugappa Group. Before the break, we talked about their remarkable growth, their robust risk management, and their commitment to ESG principles. But we just scratched the surface of their people strategies. So let's dig deeper into how CIFCL is attracting, developing, and retaining talent in a rapidly growing and competitive industry.
It's a fascinating challenge, isn't it? They've gone from a relatively small team to a workforce of over 64,000.
Right.
That kind of expansion requires a very deliberate approach to talent management.
It's like going from a small family gathering to hosting a massive music festival. You need a lot more infrastructure and a different kind of energy to keep things running smoothly.
Exactly. And CIFCL seems to understand that.
So what have they done?
They've invested heavily in creating a structured career progression framework.
Okay.
It's not just about hiring people. It's about providing clear paths for growth and development within the company.
So it's like they're building a career ladder, not just a career jungle gym.
That's a great way to put it.
I like that.
They want their employees to see a future for themselves at CIFCL, and that means providing opportunities for advancement, skill development, and leadership training.
So they're really investing in their people.
They are.
And are they doing anything specific to foster a sense of community and belonging, especially given their rapid growth?
It seems like they're focusing on creating a culture of learning and collaboration. They've got mentorship programs, knowledge-sharing platforms, and even internal social networks that help employees connect with each other and learn from one another's experiences.
So they're creating a virtual water cooler where employees can connect, share ideas, and build relationships, even if they're not physically in the same location.
Precisely, and that's particularly important in a company with such a geographically dispersed workforce.
It is, speaking of geographical reach, we touched on CIFCL's extensive network of branches across India earlier. How is that network contributing to their growth and their talent pool?
Their presence in both urban and rural areas gives them access to a wider talent pool, which is a huge advantage in a competitive market.
Yeah, it makes sense.
They're not just recruiting from the major cities, they're tapping into the talent in smaller towns and villages.
So they're casting a wider net and bringing in fresh perspectives and experiences.
Exactly. And they're also providing opportunities for employees to experience different parts of the country and gain a broader understanding of the Indian market.
It's like a built-in cultural exchange program.
It is, and that's a valuable experience for any employee, especially those early in their careers.
Okay, we've talked about growth, risk management, ESG, and talent, but there's one elephant in the room that we need to address. The Murugappa family feud has been in the news quite a bit lately, and it's raised questions about corporate governance stability and the company's ability to focus on its long-term goals. So let's unpack this sensitive topic carefully.
It's important to acknowledge this issue because it has the potential to impact the company's future. Family feuds in business can be incredibly distracting and can sometimes derail even the most successful companies.
It's like having a family drama playing out on a public stage, and it can be unsettling for investors, employees, and customers.
Exactly. And in this case, the feud has involved legal battles and disputes over board positions, which has created some uncertainty.
Yeah, it's definitely something that people are watching closely. So how has CIFCL responded to these concerns? Have they just ignored the issue and hoped it would go away?
To their credit, they haven't swept it under the rug. They've acknowledged the situation and have taken steps to address the concerns. They've strengthened their corporate governance structures, brought in independent directors to the board, and have been more transparent about the situation with their stakeholders.
So they're trying to reassure everyone that they're taking the situation seriously and are working to resolve it in a way that's in the best interest of the company and its stakeholders?
Precisely. It's a delicate balancing act, and it remains to be seen how this will all play out in the long run. But the fact that they're taking concrete steps to address the issue is a positive sign.
It shows they're committed to maintaining good corporate governance, even in the face of challenging family dynamics.
It's a reminder that even the most successful companies are not immune to these kinds of challenges.
And that navigating family dynamics in a business setting requires a special kind of skill and diplomacy.
Absolutely. It's a
Yeah.
complex situation with no easy answers.
Okay, let's shift gears again and talk about something that's critical to any financial institution's success funding. CIFCL has a very diversified borrowing profile, which we touched on earlier, but let's delve a bit deeper into the specifics. Who are they borrowing from, and how does this diversity contribute to their financial strength?
It's like a well-balanced diet for a financial institution. They're not relying too heavily on any one food group. They've got a mix of bank loans, debentures, commercial papers, and even external commercial borrowings.
So they're spreading their risk and ensuring they have access to capital from a variety of sources, even if one market dries up.
Precisely, and they've been very strategic about tapping into both domestic and international markets. They've raised capital through foreign currency borrowings and have even issued bonds in overseas markets.
So they're playing on a global stage, and this diversified funding base gives them more flexibility and resilience, especially in today's uncertain economic climate.
Absolutely. It means they're not beholden to any one lender or investor, and it gives them the freedom to pursue growth opportunities without being constrained by funding limitations.
It sounds like they've got a pretty solid financial foundation, but let's talk about something that's changing the game for financial institutions everywhere: technology. It's clear that CIFCL is investing heavily in digital innovation. They've got a comprehensive digital strategy that spans everything from loan origination to customer service.
What's impressive is how they're not just digitizing for the sake of digitizing. They're using technology to create a more seamless and efficient experience for their customers. They've got a user-friendly mobile app, a robust online platform, and they're even using artificial intelligence and machine learning to personalize their services.
So they're not just keeping up with the Joneses, they're trying to leapfrog them.
And they're also using technology to improve their internal operations, making their processes more efficient and data-driven.
Let's talk about some specific examples. We know they've launched a digital platform for loan origination. How has that changed the game?
That platform has streamlined the entire loan application process, making it faster, easier, and more transparent for customers. It's like going from filling out a stack of paperwork to applying for a loan with a few taps on your phone.
Sounds convenient.
They've also got a sophisticated collection management system that's leveraging data analytics to improve collection efficiency.
So they're making it easier to borrow money and, well, to pay it back.
And they're even building an ecosystem for their vehicle finance business.
Yeah.
They've created an online marketplace where customers can buy and sell used vehicles, get vehicle valuations, and even access financing options.
So they're going beyond the traditional role of a financial institution and becoming a one-stop shop for all your vehicle needs.
Exactly. They're creating a seamless experience for their customers, and they're using data analytics to make it all happen. They're using data to understand their customers better, to personalize their services, to manage risk more effectively, and to identify new growth opportunities.
It's like they're building a personalized financial concierge for each of their customers.
That's a great way to put it. They're using data to anticipate their customers' needs and to provide solutions that are tailored to their individual circumstances.
Okay, so they've got the technology, but what about the talent to drive this digital transformation? We talked about their broader talent strategies earlier, but are they doing anything specific to attract and retain top tech talent?
They're recognizing that the competition for tech talent is fierce, and they're stepping up their game. They're offering competitive salaries and benefits packages, and they're creating a work environment that's appealing to tech professionals.
So it's not just about the paycheck, it's about creating a culture that's innovative, collaborative, and challenging.
Exactly. They want to be seen as an employer of choice for top tech talent.
Okay, let's move on to another important aspect of their story, their shareholding structure. It looks like the Murugappa family still has a significant stake in the company. How are they balancing their family legacy with the need to attract a diverse group of investors?
It's a delicate balancing act. They've managed to maintain a strong family presence while also attracting a diverse group of investors, including foreign institutional investors, domestic mutual funds, individual shareholders, and corporate bodies.
It's like they're weaving together the threads of tradition and modernity.
That's a great analogy.
Yeah.
They've got a strong foundation built on their family legacy, but they're also embracing a more modern approach to corporate governance.
And this mix of investors brings a diversity of perspectives and expertise to the table.
Absolutely. It also creates a more stable shareholder base, which is important for long-term growth.
But how has this family presence influenced the company's overall strategy and direction? Has it been a positive or a negative force?
That's a complex question. On the one hand, the family's long-term vision and deep understanding of the Indian market have been valuable assets. On the other hand, there have been concerns about whether family interests are sometimes prioritized over the interests of other stakeholders, especially given the recent feud we discussed earlier.
So it's a mixed bag.
It's a dynamic that's worth watching closely as the company continues to evolve.
Okay, let's shift our focus to their geographic footprint. They've got a vast network of branches across India, reaching from major cities to smaller towns and villages. How is this extensive network contributing to their growth?
Their strong geographical presence is a key differentiator, especially in a market as vast and diverse as India. They're not just concentrated in the major metropolitan areas. They've got a strong presence in Tier 3, Tier 4, Tier 5, and even Tier 6 towns. They're reaching into the heartland of India, tapping into markets that are often overlooked by other financial institutions.
So they're not afraid to go off the beaten path.
And this deep penetration into rural and semi-urban areas is giving them access to a wider customer base and a wider talent pool.
It's also helping them promote financial inclusion, which is a key part of their ESG agenda.
Absolutely. They're bringing financial services to communities that have traditionally been underserved, and they're leveraging their branch network to build strong relationships with local communities.
So it's not just about transactions, it's about building trust and becoming a part of the community.
That's a powerful differentiator in a market where relationships matter.
But managing such a large network of branches comes with its own set of challenges. How are they ensuring consistent service quality across all locations?
That's a constant challenge for any company with a large geographical footprint. But CIFCL seems to be addressing it through a combination of standardized processes, rigorous training programs, and regular audits.
So it's about creating a system that's replicable and scalable while still allowing for flexibility and local adaptation.
Exactly. They're striking a balance between centralization and decentralization.
Okay, let's take a closer look at their financial performance. Over the past 15 years, they've been on an impressive growth trajectory. But how has that growth translated into concrete financial results?
It's been a remarkable journey. They've seen substantial increases in total income, driven by strong growth in their core business segments, and that growth has, of course, translated into higher profits.
So they're not just getting bigger, they're getting more profitable.
It's exactly. Their profit after tax has been on a steady upward trend, which is good news for their shareholders.
And have they been able to control their expenses as they've grown? Because that can be a challenge.
They've been very disciplined in managing their expenses, which is crucial for maintaining profitability, especially during periods of rapid growth.
That's impressive. It shows they're not just spending money recklessly, they're being strategic and efficient.
And they've also maintained a healthy asset quality. Their non-performing asset ratio has been consistently low, which is a positive sign.
It means they're lending responsibly and managing their risk effectively.
Precisely. It's a testament to their strong credit risk management practices.
Okay, let's get into some specific financial metrics. Their net interest income, which is basically the difference between the interest they earn on loans and the interest they pay on deposits, has increased substantially.
That's a key driver of profitability for any financial institution. And CIFCL's growth in net interest income reflects both the growth in their loan book and their ability to manage interest rate spreads effectively.
So they're not just lending more money, they're also making sure they're earning a good return on those loans.
And they've also seen strong growth in their fee income, which comes from things like processing fees and advisory services.
So they're diversifying their revenue streams, which is always a good thing.
It makes their business model more resilient and less reliant on any single source of income.
Okay, let's talk about profitability in a broader sense.
Yeah.
What are some of the key profitability metrics they're tracking?
They're focused on metrics like return on assets, return on equity, and net interest margin.
And how are they performing on these metrics?
They're delivering strong results. Their profitability metrics are consistently above industry averages, which is a testament to their operational efficiency and their ability to generate strong returns on their investments.
So they're not just growing, they're growing profitably.
Precisely, and that's what makes their story so compelling, but of course, every company faces challenges.
What are some of the headwinds CIFCL might encounter as it continues to grow and evolve?
One of the biggest risks they face is competition. The Indian financial services market is becoming increasingly crowded, with new players entering the market all the time.
So they can't afford to rest on their laurels.
Absolutely. They need to keep innovating and differentiating themselves to stay ahead of the pack.
And they need to manage their asset quality carefully. Even a small increase in their non-performing asset ratio could have a significant impact on their profitability.
They also need to be mindful of the regulatory environment, which is constantly evolving.
And of course, there's always the risk of unexpected events like global economic downturns or geopolitical instability.
But CICL seems to be aware of these challenges and is taking steps to mitigate them.
So they're not sticking their heads in the sand, they're being proactive and strategic.
And that's a good sign. It suggests they're well positioned to navigate the complexities of the financial services landscape.
Okay, we've talked about their financial performance, their growth strategy, and the challenges they face now. Let's zoom in on one area that's critical to their long-term sustainability risk management. We've already touched on their strong credit risk management practices, but what other types of risks are they grappling with and how are they addressing them?
They're operating in a complex and dynamic environment where risks are constantly evolving. So they need to be prepared for a wide range of potential threats, from operational risks to market risks to regulatory risks.
It's like they're playing a game of financial whack-a-mole.
That's a great way to put it. And they need to be nimble and adaptable to stay ahead of the game.
So how are they building that agility and adaptability into their risk management framework?
They seem to be taking a holistic approach to risk management with dedicated teams focusing on different types of risk and a robust system for monitoring and controlling risk across the organization.
So they're not just putting out fires, they're trying to prevent them from starting in the first place.
Exactly. It's about being proactive rather than reactive.
Okay, let's dive into some specifics. What are they doing to manage credit risk, which is obviously a major concern for any financial institution?
They're leveraging data analytics and machine learning to assess creditworthiness, set appropriate loan terms, and monitor their loan portfolio for early warning signs of potential delinquencies.
So they're using the power of data to make smarter lending decisions.
And they're constantly refining their credit policies and procedures to stay ahead of the curve.
It's like they're building a smarter, more adaptive lending machine.
And they're also focused on fraud risk management. They've got a multi-layered approach to fraud prevention and detection, including sophisticated fraud detection systems, thorough background checks, and ongoing employee training.
So they're building both a technological and a human firewall against fraud.
And cybersecurity is a top priority as well, which is no surprise given the increasing sophistication of cyber attacks.
Right. It's a huge concern for any company these days, especially financial institutions.
Absolutely.
So what are they doing to protect themselves?
They're making significant investments in cybersecurity, recognizing that it's a critical component of their overall risk management strategy. They're strengthening their IT infrastructure, implementing robust security protocols, conducting regular security audits, and investing in employee training to raise awareness about cybersecurity risks.
So they're taking a multi-pronged approach to cybersecurity.
And they're also focused on managing regulatory risk, which is essential in a highly regulated industry like financial services.
Yeah, the rules and regulations are constantly changing. It can be hard to keep up.
It can be.
So how are they staying on top of things?
They've got a dedicated compliance team that's constantly monitoring the evolving regulatory landscape and ensuring that the company is adhering to all applicable regulations.
So they're not taking any chances when it comes to compliance.
And they're also thinking about those emerging risks, the ones that are harder to predict but could have a significant impact on their business. What are some of the things that are keeping them up at night?
All right.
They're focusing on risks like climate change, technological disruption, and geopolitical instability.
So it's not just about managing the known unknowns, it's about anticipating the unknown unknowns.
Exactly, and they're developing strategies to assess and mitigate these emerging risks, building resilience into their business model to withstand potential shocks.
Let's zoom in on one specific risk that's getting a lot of attention lately, climate change. How is CIFCL addressing climate-related risks?
They're taking a comprehensive approach, incorporating climate change considerations into their risk management framework and assessing the potential impact of climate change on their loan portfolio, their operations, and their supply chain. They're also exploring opportunities to finance climate-friendly projects, recognizing that climate change is not just a risk, but also a potential source of growth.
So they're seeing the opportunity and the challenge.
And they're thinking about how to adapt to the physical impacts of climate change. They're assessing the vulnerability of their assets to climate-related events and developing strategies to enhance their resilience.
It's about being prepared for a changing world.
And it's about recognizing that climate change is not just an environmental issue, it's a business issue.
Okay, we've covered a lot of ground here, from CIFCL's impressive growth and financial performance to their robust risk management practices and their commitment to addressing emerging risks. But we haven't yet delved deeply into their environmental, social, and governance ESG initiatives. They've been recognized for their strong ESG performance. But what does that actually mean in practice? What specific actions are they taking to make a positive impact on the environment, on society, and on the way they govern their business?
Their ESG initiatives are more than just window dressing. They've woven these principles into the fabric of their business, demonstrating that it's possible to be both profitable and responsible.
So let's unravel those threads and take a closer look at how CIFCL is putting ESG into action.
They've got a clearly defined ESG policy that outlines their commitments in key areas like climate change, social impact, and corporate governance. And they've got a dedicated ESG governance structure to ensure those commitments are more than just words on paper.
So it's a roadmap for action, not just a mission statement.
Exactly. And they're walking the walk, setting specific targets, measuring their progress, and reporting their results transparently. They're showing they're accountable for their actions.
Okay, let's break down their ESG framework on the environmental front. They're focusing on reducing their carbon footprint, right?
They're implementing energy efficiency measures, investing in renewable energy sources, and even promoting sustainable transportation options for their employees and customers.
And they're committed to responsible waste management and resource conservation.
They're also taking steps to reduce their water consumption and to minimize their impact on biodiversity. They understand that environmental sustainability is about more than just reducing carbon emissions. It's about managing their impact on the planet holistically.
So they're taking a comprehensive approach to environmental stewardship.
And they're not just setting vague goals. They've got specific measurable targets for reducing their environmental impact. For example, they've committed to reducing their greenhouse gas emissions by a certain percentage by a specific year. And they're tracking their progress toward these targets and reporting on their results regularly.
So it's about accountability and transparency.
They're demonstrating that they're serious about their commitment to environmental sustainability, and they're setting a high bar for other companies to follow.
Okay, now let's shift our focus to the social side of their ESG policy. What are some of their key initiatives in this area?
They're focused on promoting financial inclusion, creating a diverse and inclusive workplace, supporting community development, and upholding human rights throughout their operations and supply chain.
It's about making a positive social impact both within their company and in the wider community.
Exactly, and they're not just talking about it. They're taking concrete actions, for instance. They've launched financial literacy programs to empower individuals and communities. They're providing microloans to support small businesses and entrepreneurs, helping to create economic opportunities and drive social mobility.
And they're also actively promoting diversity and inclusion within their workforce, right?
They're setting targets for gender diversity at all levels of the organization. They're implementing programs to attract and retain a more diverse talent pool. And they're working hard to create a more inclusive work environment where everyone feels valued, respected, and empowered to contribute their best.
So they're not just ticking boxes, they're putting in the work to create a truly diverse and inclusive workplace.
And they're going beyond their own walls to engage with their local communities, supporting educational initiatives, healthcare programs, and other community development projects. They're being good corporate citizens.
And they're actually measuring their social impact. They're tracking the number of people they've reached through their financial inclusion programs. They're assessing the impact of their community development projects. They want to see tangible results.
They understand that measuring their social impact is crucial for demonstrating the value of their ESG initiatives and for identifying areas where they can improve.
Okay, now let's move on to the governance side of their ESG framework. What are some of their key commitments in this area?
They're committed to ethical business practices, strong corporate governance structures, transparent financial reporting, and robust risk management.
It's about building trust and ensuring accountability.
They've got a clear code of conduct that outlines their ethical principles. They're committed to complying with all applicable laws and regulations. They've got a strong independent board of directors that provides oversight of the company's operations. And they're committed to transparency, regularly disclosing information about their ESG performance to their investors and other stakeholders.
So they're not just trying to look good, they're actually trying to be good.
And they're not doing it alone. They're actively engaging with their stakeholders, soliciting feedback, and ensuring that their ESG efforts are aligned with stakeholder expectations.
So it's a collaborative effort.
It's about recognizing that ESG is not just a compliance exercise. It's about building a sustainable business that creates value for all stakeholders.
It's clear that CIFCL is taking a comprehensive and integrated approach to ESG.
And that's what makes their story so compelling. They're proving that it's possible to be a successful business while also being a responsible corporate citizen.
And they're setting a high bar for other companies to follow. They're not perfect, but they're making a genuine effort to do the right thing.
And that's something to applaud.
Okay, we've covered a lot of ground in this deep dive into CIFCL. We've explored their remarkable growth story, their robust risk management practices, their impressive financial performance, their people-centric approach to talent management, and their comprehensive commitment to ESG principles.
But as we approach the end of our exploration, it's important to step back and consider the bigger picture. What does CIFCL's story tell us about the future of the financial services industry?
Are they a harbinger of a new era of responsible and sustainable finance, or are they an outlier in an industry that's still struggling to reconcile profit with purpose?
That's the million-dollar question, and it's one that we'll continue to explore in our future deep dives.
But for now, let's leave our listener with a final thought-provoking point to ponder. We've seen that CIFCL is a company that's firing on all cylinders. They've got a strong track record, they're well-managed, they're committed to ESG, and they're embracing digital innovation. But the question is, can they sustain this momentum in the long run?
The world is changing rapidly, and new challenges are emerging all the time. Think about things like the rise of fintech, the evolving regulatory landscape, and the increasing pressure to demonstrate a positive social and environmental impact.
What will it take for CIFCL to stay ahead of the curve and continue to thrive in this dynamic environment?
What new strategies will they need to adopt? What new skills will they need to develop? What new partnerships will they need to forge?
These are questions that only time will answer.
But one thing is certain: CIFCL's journey is far from over, and we'll be here to watch it unfold.
And we encourage our listeners to do the same. Don't just take our word for it. Go out there, do your own research, and form your own opinions.
Because the most rewarding deep dives are the ones you take yourself.
Stay tuned for part 3 of our exploration of CIFCL, where we'll delve even deeper into their strategic vision for the future and explore the key factors that will shape their journey in the years to come. Welcome back to the deep dive. We're wrapping up our exploration of CIFCL, and in this final part, we're stepping into the role of fortune tellers, gazing into our crystal ball to see what the future might hold for this dynamic company.
Predicting the future is always a tricky business.
It is.
But looking at CIFCL's past performance, their strategic moves, and the broader industry trends can give us some clues.
So let's put on our futurist hats and imagine CIFCL 10 years from now. What do you see?
I see a company that's even bigger.
Okay.
And more influential than it is today, but also one that's had to navigate some significant challenges and opportunities along the way.
Okay, let's break that down. What are some of the key factors that will shape CIFCL's future?
Well, one of the biggest factors will be the continued rise of fintech. New technologies and business models are disrupting the financial services industry at a dizzying pace.
It's like a tech tsunami is washing over the financial world.
That's a great analogy.
I try.
CIFCL will need to stay agile and innovative to ride that wave, rather than being swept away by it.
So they'll need to be more than just a traditional financial institution. They'll need to become a tech-savvy, customer-centric, and data-driven organization.
Exactly. They'll need to keep investing in digital innovation, building out their tech infrastructure, and attracting and retaining top tech talent.
And they'll need to keep experimenting with new technologies and business models, even if some of those experiments fail.
It's about embracing a culture of innovation and being willing to take calculated risks.
But technology is just one piece of the puzzle. What about the regulatory landscape? It's constantly evolving, which can be a challenge for any financial institution.
Absolutely. The regulatory environment in India is becoming increasingly complex, with new rules and regulations emerging all the time.
It's a lot to keep up with.
It is. CIFCL will need to stay ahead of the curve, anticipating changes, adapting quickly, and ensuring they're always in compliance.
So they'll need a strong compliance team
Yes.
and a culture of compliance throughout the organization.
And they'll need to be proactive in engaging with regulators and policymakers
Okay.
to shape the regulatory landscape in a way that supports innovation and responsible growth.
That's a smart move. It's better to be part of the conversation than to be reacting to decisions made by others.
I'd agree.
And of course, there's the ever-present challenge of competition. The Indian financial services market is incredibly competitive,
It is.
with new players entering the market all the time.
All the time.
So how can CIFCL maintain its competitive edge?
Well, they'll need to continue differentiating themselves by offering unique products and services, building strong customer relationships,
Right.
and leveraging their deep understanding of the Indian market.
And they'll need to continue investing in their people, developing their skills, and creating a workplace culture that attracts and retains top talent.
Absolutely, because in the end, it's the people who make the difference.
And let's not forget about their commitment to ESG principles that's becoming increasingly important for investors and customers alike.
It is CIFCL will need to continue demonstrating its commitment to environmental sustainability, social responsibility, and ethical governance.
They'll need to keep raising the bar for themselves, setting ambitious targets, and reporting their progress transparently.
They'll also need to be proactive in addressing emerging ESG issues, such as climate change and social inequality.
So it's not just about doing good. It's about doing better, continuously improving their ESG performance.
And it's about recognizing that ESG is not just a compliance exercise or a marketing ploy. It's a fundamental part of building a sustainable and responsible business.
It's about creating a business that's not just profitable, but also a force for good in the world.
And that's a vision worth striving for.
So CIFCL's future is full of possibilities.
It is.
Both exciting and challenging.
For sure.
But if they can navigate these trends and challenges effectively, they have the potential to become a truly transformative force in the Indian financial services industry.
I think they do.
They have the opportunity to set a new standard for responsible and sustainable finance, demonstrating that it's possible to achieve both financial success and positive social impact.
It's a powerful message.
And that's a legacy worth building.
Absolutely. It's a legacy that could inspire a whole generation of business leaders to embrace a more purpose-driven approach to business.
So to our listener, we encourage you to watch CIFCL's journey closely.
Yes. Pay attention to their strategic moves, their technological innovations, and their commitment to ESG principles.
Because their story is a microcosm of the larger trends that are shaping the future of business and finance.
It is a fascinating case study.
And it's a story that's just beginning to unfold.
I can't wait to see what happens next.
And on that note, we wrap up our deep dive into CIFCL. We hope you found this exploration insightful and engaging.
It's been a pleasure diving deep with you.
We've covered a lot of ground, from their remarkable growth story to their complex challenges.
It's been a fascinating journey.
But the learning doesn't stop here. We encourage you to continue your own research and delve deeper into the topics we've discussed.
Absolutely. There's always more to learn.
Because ultimately, the most rewarding deep dives are the ones you take yourself.
That's so true.
So keep exploring, keep asking questions, and keep diving deep until next time.